Yeah, that's what it's really about, isn't it? I mean, the graphic you had earlier, Matt, of all the colours of the markets across the region, there aren't any in the green at all. You really have to dive into the entrails of the market to find places to hide. I mean, gold's an obvious one. The Aussie market only down about 30 bips in a region that's down, you know, a couple of hundred bips in some cases. So it's really only those gold stocks, and also in some markets, the real estate sector, the ones that have got a reasonable yield, reasonable defensive yield, is where we're going. But it was just interesting seeing that footage earlier of a room full of Americans cheering at the tariffs, which are effectively a tax on them. So it's obviously a nice little bit of spin by the president to say we're taxing China, but you know, they're already raising $62.5 billion in tariffs from the first lot, and now they're raising another 30. So the government's basically taxing Americans to the tune of $100 billion, and yet they're cheering for it. So a little bit ironic for me, but obviously this is kicking off another round of uncertainty for markets, hence the response we're seeing today, Matt.
Yeah, do you think we could now be at a turning point for the markets? Because we had the Fed this week. Of course, many were expecting the Fed and Jay Powell to be a lot more dovish than they were. They weren't. It looks like it could only be a one rate cut. Now it appears as though we have an escalation in the trade war. So the market's really been disappointed on two fronts. Could this be the moment that we now start to see markets take a bit of a leg down as we reassess the situation?
It wouldn't surprise me at all if we had a little bit of a breather and a little bit of a pullback, Matt. And the reason for that really is we've had three put options, if you like, that have been at work on investor psychology, one being the central bank put, one being the Xi Jinping put. If the Chinese economy slows, they can stimulate. The third put we're starting to question, which is the Trump put. We all know he's up for election November next year. We didn't think he'd do anything to upset the momentum in the US economy and the momentum in the US share market, but clearly his move overnight suggests that in the short term anyway, he's happy to muck around with that. So, you know, he said there 10%, we might move these up. We're going to put more pressure on China. Is he also putting more pressure on the Fed? Because obviously if the market gets the jitters about an escalation of trade war, it does impact the economy and economic sentiment. Is that more ammo for Jay Powell to cut another once or twice in line with history? And then obviously Trump can turn around, do a deal and sail into 2020 with a wet sail. So look, it's a little bit Machiavellian, but I wouldn't put it beyond this president to think like this.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.